Welcome. We're going to jump right in and talk about a massive plan from the UK's financial regulator to fix unfair car loan charges. We're talking about millions of people who may have paid way too much in a multi-billion-pound effort to finally make it right.
So, listen up. If you've bought a car on finance in the UK at any point since April 2007, then this explainer is absolutely for you. I mean, that's a huge window of time, and it means millions and millions of people could be affected.
The Financial Conduct Authority, the FCA, they've uncovered a really systemic issue here. And the plan they've put forward, well, it could cost the industry a staggering £11 billion to compensate all the customers who lost out. That's a huge number. Okay, let's get into what actually went wrong. At the very heart of this whole thing was a hidden conflict of interest. It basically created a situation where the person arranging your loan actually had an incentive to make it more expensive for you.
And this system had a name, a discretionary commission arrangement, or DCA for short. Now, in simple terms, this gave the broker, who was often the car dealership, the power to set your interest rate. And here's the kicker. The higher the rate they charged you, the more commission they pocketed from the lender.
And this slide just perfectly illustrates the problem. See, on the one hand, your interest rate should always be based on your own financial situation, right? But with a DCA, it could be pushed higher just so the broker could get a bigger payday. So you could have been a perfect candidate for a really low rate, but still ended up paying more anyway. But it gets worse. The FCA's investigation found the problems ran even deeper than just these DCAs. They also found ridiculously high commissions and these tied arrangements, where a broker was locked into using only one lender. And that meant they couldn't even shop around to find you the best deal. And crucially, none of this was being properly explained to people. So you might be wondering, just how big was this problem? Well, the FCA looked at data from over 31 million agreements, and their analysis estimates that 14.2 million of those, that's a massive 44% of all car loans since 2007, were potentially unfair because of these shady arrangements. So how in the world did this all come to light? Well, it definitely wasn't an overnight thing. This has been building for years, really driven by tens of thousands of consumer complaints and a whole series of landmark legal battles that really challenged how the entire industry was working.
This timeline shows you all the key turning points. You can see that while new consumer protection laws came in way back in 2007, the real momentum didn't start until the FCA banned DCAs completely in 2021. And that was followed by these crucial court judgments that confirmed, yep, failing to disclose these commissions created an unfair relationship for the borrower.
So, with the problem clearly laid out, what's the solution? Well, the FCA is now proposing this huge, industry-wide redress scheme. The whole idea is to compensate millions of people in a fair and orderly way. And the main goal here is to avoid this messy case-by-case fight in the courts. The scheme is designed to create a simple, consistent process so that everyone who is overcharged gets their money back fairly, without all the hassle of legal action. Now, while every single case is going to be calculated individually, the FCA's modeling suggests the average payout will be somewhere around £700 for each unfair agreement. Of course, some will be more, some will be less, but that's the kind of ballpark figure we're looking at. And what's really important here is that the burden of all this work falls on the lenders, not on you. As you can see from the process, they are the ones who have to go back, identify every single potentially affected loan, and then proactively contact customers to invite them into the scheme. And the FCA is being crystal clear on this point. You should not need to pay a claims management company to handle this for you. The entire process is being designed so that you can navigate it all by yourself for free. Okay, so let's get to the big question. How do you know if this actually applies to you? Let's break down the proposed eligibility rules for the scheme. Think of this slide as your eligibility checklist. The dates are really key. Your agreement has to be between April 2007 and November 2024. A commission must have been paid to the broker, and the scheme is for individuals and small businesses, not for big corporations. How you join the scheme really depends on your situation. If you're one of the thousands of people who have already complained to your lender about this, you'll likely be automatically included in the scheme. But if you haven't complained, don't worry, you'll get a letter inviting you to opt in and participate. So what happens next? And what are the key things you need to remember as this all moves forward?
First, and this is really important, these rules are currently just a proposal. The FCA is in what's called a consultation period, so they're gathering feedback from the industry, from consumer groups, and from the public before they make all the rules final. But once the scheme gets the final green light, things are going to move pretty quickly. Lenders will have just 3 months to contact people who've already complained, and only 6 months to contact everyone else who might be eligible. At the end of the day, this whole huge undertaking is about more than just the money. It's a massive intervention aimed at correcting a widespread problem and, maybe more importantly, trying to restore trust in a market that millions of us rely on every single year. The big question is, will it be enough?